Okay, peeps, welcome back. So today we're going to be talking about the Bitcoin miner stocks and how things were looking good yesterday until the CPI came out today, and then yikes is all I got to say about that. So let's get it. First thing I want to show you guys is we are actually in a live trade here. As you guys can see, this is kind of our setup. We're trading the Russell 2000 right now. So just so y'all know, the video that we posted yesterday was legit. It was not live, unfortunately. We have to get some software for that, but we do trade. So with that being said, let's go ahead and get into the content. So you guys can see here that we have a CIFR sell call. So basically, we went ahead and wrote an option on 100 shares of CIFR that we have. Basically, we went in for a $30 premium. That's what that 0.3 means, is basically $30. So 30 cents times 100 contracts is basically $30. And the expiration date is set to the 15th of March. Now, why do we do this? Well, it's pretty simple because the price of CIFR was in the money at the time that we wrote this contract, and there was a sell contract that paid a premium of $30 that was at the $5 strike price. So basically, this thing has to hit at or above $5 in order for our shares to get called away. Now, we have 150 shares of CIFR, as we're going to show you guys here in a minute. You guys can see we have 150 shares of CIFR, so we were only able to write one contract. We don't have enough yet to write two, but you guys can see that we're in the money here. So basically, if this thing hits $5 or above by March 15th, our shares will get called away. So there's three different ways that we could play this. This is a covered call, just so y'all know that in real life, real time, real example, this is what a covered call is. So basically, we have to have 100 shares to sell a call of this, preferably for higher than our cost basis. So the strike price is $5. The cost basis is $3.27. So more or less, pretty much, kind of what we're trying to do here is not get called away, collect the premium, and sell our shares at a later point in time for a higher level of profit. So there's three different ways that this could play out. The first way is by March, we could let the contract expire, and then by March 15th, it hits at or above the strike price. Our shares get called away, and we have to sell them for a profit, but we also get to collect the premium. So what is the profit going to be? Well, the profit would basically be $5 minus $3.27, which is the average price times 100 shares. So we'd get $173 in profit, plus we'd also get to keep the $30 in premium, and we would get our initial investment back. That's scenario number one. Scenario number two would be that the contract expires with the shares closing March 15th below the strike price. Again, the strike price is $5, so anything below $5 by March 15th, the contract expires worthless. We get to keep the $30 in premium, and we do not have to sell our shares. That's option number two. Option number three would basically be to pull the contract or buy the contract back, which you guys can see here. Buy CIFR, we basically just put in for one contract. We'd buy the contract back. Let's say that since it's a $30 premium and it's it's 30 days out, we basically are collecting $1 premium per day. So let's say 5 days before the close of the contract. At 25 days, we want to pull it because we think it's going to close above the strike price. So we're going to say, okay, we're just going to cover our position. So essentially, we would collect $25 of premium, and we would have to pay the other $5 to be able to buy the contract back. So we would keep our shares and walk away with a $25 in premium. And then the fourth option that we haven't looked at yet is to roll the contract, but I don't think we're going to do that this time around. So we're still kind of getting familiar with how all this option stuff works. So with that being said, we'll take a look at one more thing on the portfolio, then we'll get into the charts. So we don't have enough HUT 8 yet to write a covered call, unfortunately, but we're just kind of waiting to see if we get another opportunity to buy the dip on those. So BTBT, we have moved our share count up to over 200, so we can write now 2 contracts on this. As you guys can see, the cost basis is still below the average cost. We're kind of waiting for this thing to get probably closer to $4 at the market price to actually sell a call or calls on this. So with that being said, let's now get into the content, or the charts, I should say. Let me actually check on this trade real quick to make sure we're not about to get walloped on the trade. Okay, still looks like it's trying to sell. That's good. As you guys can see here, you kind of have like these 4 candles up here. It didn't close above any of those. That's a pretty bearish signal if you ask me, but it could go higher. So we got our stop up there just in case it tries to move against us. So with all that being said, CPI came out this morning. It was not what the market wanted to hear. Basically, it came in slightly hot, which means that the market is now convinced that the Fed's not going to cut in March, maybe not even in May. The higher for longer thesis that the Fed was talking about, basically keeping rates higher for longer. So markets didn't like that. They sold off. If we zoom out on the Russell 2000 here, you guys can see what I'm talking about. Massive sell-off here at 5:30. That was the Pacific Standard Time for the release date, or the release of the data, and there was just a huge capitulation. So BTBT still kind of looking bullish. I mean, it's above the EMAs, but this wick is not giving me confidence. That's okay. If it comes down, we'll just simply buy more. So the EMAs' support sits between 275 to about I'd say about $3. You could potentially wait to get it down here at these candle bottoms at about $2.50 a share. And then your macro support is still going to be between $1.50 to $2, and resistance between $4.12 to roughly about $5.30 a share. So if we go over to CIFR now, CIFR actually looks a little bit better than BTBT. So we basically had a perfect bounce out of the support. It took a little while, but we did get out of there. We may be about to have another golden cross. We'll just have to wait and see on that on the MACD. So your RSI sits between just under $3 to about $3.20 a share. Current price is $3.50 a share, or $3.48 more specifically. And your support's between $2.25 to roughly about $2.70 a share, and resistance between about $5 to, I would say, probably to the top of this wick, so about $5.60. Still pretty good time to get into CIFR, I would say. I mean, even if you bought here, you'd still be taking a look at a massive gain between 45 to 60%. Keep in mind, when we take swing trades on non-dividend paying stocks, we usually only aim for a 15% profit. So that's pretty small, even in comparison to what this could produce. So BITF, this one is definitely looking way more bullish than BTBT and CIFR, but if you were in way back here, then you're obviously massively in the money. You're at almost a 3x at this point, so congratulations. So your support's probably going to be, I would say, more around this zone, so about $2 to about $2.30 a share, and the resistance will be roughly about $3 to $3.60 a share. Your macro support's down here between 38 cents and 90 cents. I mean, you could buy this one if you wanted to for like a more long-term play, but in the short-term play, just my opinion, of course, I would not be buying this because it's hitting resistance right now. The ideal time to buy is down in these zones down here, or kind of around the EMAs, not necessarily once it's tapping resistance. I think it's a little bit late to get in. That's what's known as FOMOing into the top. We try to avoid that at all costs here, but you're welcome to do what you want. So now we're going over to HUT 8. So HUT 8 is still very, very cheap. It's still within the buy zone. So the buy zone is within $4 and $9, and the resistance is roughly about $17 up to as high as about $22.50. Now notice that the price of HUT 8 here is still below the EMAs, so that could potentially be a bearish signal. But do I think it's going to go back down below the support zone? Not really. I mean, if we pull this thing out like really, really far back, I mean, the lowest this thing has ever gone, and that is even before the previous Bitcoin bull run, was $1.32. Could it go back down to $1.32? I mean, it's possible, but I would say probably not likely, because we had our bottom back here during the bottom of the bear market. As you guys know, Bitcoin bottomed out, so did everything else, and then we just moved up from there. We never really went back down below that, so I would say the probability of hitting $1.32 is almost non-existent at this point. The MACD and the RSI are bearish, but again, this is in the buy zone, so this could easily flip the EMAs and start shooting to the upside. If we take a look at the potential profit here that you could be making, so from current price to the resistance, about 98% up to 164%. Just so you all know, if we had 164% trade, that would be equal to 10 swing trades of non-crypto, non-dividend paying stocks. So that's a massive profit. I would say anything, me personally, anything above like a 20 or a 30% move in your favor in the money and stocks is a great trade for small cap, non-crypto, non-dividend paying stocks. So I'm going to check on the trade one more time. Okay, still, yeah, probably still want to give this thing some time to run so we don't get stopped out for break even. It's not really down that much. I'd like to see it get down and close below this candle here at 1986 or 1985.7. If we get a candle close below that, then I'll probably move the stop down at that point. So going over here to Riot. Riot's kind of in no man's land. It's not bullish, not bearish. If I was going to play this, I would just simply start DCAing in and let things play out how they play out. I would not put a lot of money in at this level. That's just me though. So your macro supports, the lowest level is going to be between roughly about 350 to I'd say about 540 a share. The most current support levels between roughly about 870 to $10-ish a share. And then if you wanted to use the EMAs as support, it could be $12 to maybe as high as $13.30 a share. Of course, you could use these candle bottoms here too. So we'll say roughly about the same area as the top of that support zone. And then your resistance is going to be all the way up here between roughly about, I'd say about $19 to potentially as high as $28.70. So if we do the measurement on it from current prices, you're looking at roughly about 25% to 37%. That's still a great trade as far as I'm concerned. But if you waited to get into roughly, let's say, halfway between these EMAs, you'd be looking at 52 to roughly about 70%. And if you just, I mean, if it comes back down to the support, don't really know if it's going to or not. I would say it's probably likely to hit resistance before it comes back down there, if it's going to at all. But yeah, let's try to redo this here. So if you manage to get in halfway at the support level, if you're patient enough, you get roughly about 103% gain to about 125%. And that's just in the immediate short term. If we zoom out here, you guys can see obviously the move could be much bigger. If we just want to be like really ridiculous about this, as you guys can see, I really got to zoom out here to get kind of focused in on this. You could be making from even current prices as much as 428% or a little bit more than a 4x at this point. The reason why we're positioning in the smaller Bitcoin miners like BTBT and CIFR and HUT 8 and not Riot and MARA is because, in our opinion, they have more room to run. Again, the smaller the market cap, the bigger the move. That's generally how it works. That's the reason why we don't swing trade things like Apple and Microsoft and stuff like that. We go with much smaller companies. It is more risky, but there is also more potential profit to be made. So MARA, once again, kind of just sitting around in no man's land, not really going up, not really going down. It's closer to, I would say at this point, probably resistance than support. I actually got to change this. This is now a support zone. So MARA's still looking very bullish. We basically bounced straight off of the EMAs. It did close below here. We thought like, okay, yeah, maybe it's going to go lower, but it did not go lower. It went up instead. That can happen sometimes. That's actually happened to us a couple times on our trades this morning. So actually, if we show you guys our trades this morning, you guys can see we're down $300 this morning. Unfortunately, we kind of got slapped a little bit on the NASDAQ this morning, and yeah, it was not good. So very confusing market to try to trade. This does happen sometimes. So basically, I would say probably the lowest this thing is ever going to go before the next bear market would be roughly about 730 to 1220 a share. That's just my opinion, but that's the macro support. And then the current support is $18 to about $20. And the current resistance is roughly about $29 to $33. So if we do the measurement on this from current price, you're looking at roughly about 15% to maybe about 30%, 31%. That's still a pretty good trade. I mean, that's one or two swing trades for us. If you waited to get in, let's say, basically the middle of the support, you'd look at roughly about 50 to 70%. And if you manage to get lucky and pick it up somewhere in between the EMAs here, I would say about 82% to 107%. So obviously, the lower you get this thing, the better the potential reward is. Anyways, oh, right. One more thing. Forgot to mention this one. So Coinbase. Everybody loves Coinbase, right? So we got this breakout of this downtrend here. As you guys can see, we have that trend line drawn. We did have a clear breakout and it bounced off the EMAs and support. That's very bullish confluence. Death cross on the MACD, but we have a basically a move up on the chart that is a divergence. Can't really say that it's bearish yet, even though this is a death cross, because the price is still above the EMAs and the support zone. We would need to get below basically $100, I would say, for it to be bearish. But you're basically the cheapest price I'd be looking to pick up is roughly about 105 to 113. You could maybe even get it as high as I'd say right around 124 bucks. So if you manage to get it all the way down here, so the most recent resistance, you get about a 37% gain to 60%. And if you manage to hold it all the way up here, it's about 30 or 93% to 108%. Now taking a look at the macro view here on the Coinbase stock, as you guys can see, we are a long ways away from all-time highs. And keep in mind, this is probably going to go even higher than the previous all-time high because that's generally what Bitcoin does. So we're expecting Coinbase to follow suit, but you're looking at more than a 2x at this point. If we actually measure this all the way to the absolute top, that would be roughly not quite a 3x. Well, what is 145 times 3? That's like, I think 435. So yeah, just shy of a 3x. It could do a 4 or 5x in the next bull run. It's really hard to say at this point, but we will keep you guys updated as we are seeing things that could potentially give us moves to make money or get in on the dip. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.